We want to take a look at shares of QXO. They're doing a $2 billion stock offering. They're in the bidding war, right? What's your thought? You've been in the stock a long time. The stock's down 85% from its 52-week high.
Right.
First of all, why are you still in it? And what do you make of what's going on now with the news reports of this bidding war?
Yeah, and I'm not down 85%.
I know you're not, but I mean, the stock is obviously making a statement.
No, it's not. What it was, so Brad Jacobs announced that he was buying the company, and it was at $5. And I don't know who the fools were that bid it up to 200 and change, but there was basically just Brad Jacobs saying he's buying it. And Brad Jacobs didn't buy it for that level. So when Brad took control, he did a priced the pipe at $9.14. I was one of 7 that were in that transaction.
Oh, okay.
Okay, and that's where I got in. That's where everybody got in. Volume was very thin. There was no surprise to anybody that when you have that kind of massive dilution, the stock price is going to reset, and that's what it did. Now, here's what's happened. He's been a money-raising machine, and each dollar he raises translates into future revenue and growth. So I like the fact they raised it. By the way, that block was done overnight. It was done by all big names, big fundamental producers. He's had no problem raising capital.
Do you care how the competition comes out for the GMS?
Well, you know, all we have, look, Brad is a one and done most of the time. Now, when he bought Beacon Supply, he raised it by, I don't know, a dime or 20 cents. So he's very disciplined. He's consolidated companies. He's made a fortune doing it, as has his shareholders. United Rental, you're up over 100 times. So right now, what we have is a headline that Home Depot's doing. So Brad's not in a bidding war. If Home Depot comes in at 98 or $100, I don't think Brad's going to follow him in. But he's got a war chest, and he's got a long list of M&A targets. So this is a permanent compounder. So this is one you want to own. He's promised the market it'll be a $50 billion company, you know, in over the next decade. All
right, ServiceNow, buy at D.A. Davidson. It's initiated that way, $11.50. Jason Snipe is the price target right there. What do you think? They say they're in the early stages of disrupting the CRM market.
I absolutely believe that with the new product innovations on their generative AI tools, this stock was down almost 20%. You know, pre-earnings is now down around 5% year to date. So there's been a lot of push. The earnings growth was really good. At EPS growth was 19%. Revenue growth was 18%. But they now have over 500 customers at an annual contract value above $5 million, which is 20% year-over-year growth. So there is a lot of momentum here. So I continue to like this software name.
Carrie, S&P Global, reiterated overweight, JPM, $575 is the price target. We expect S&P to organically grow revenues in the high single-digit percentage points over time, aided by innovation, pricing power, and cross-pollination of solutions across 5 segments. What do you think about that call?
I think that all makes sense. I think there's more to go. That's 10% upside from this price. It's never a cheap stock. It exists in a monopoly or duopoly situation in many of their markets, including the ratings business, which has been weak because not a lot of issuance of new debt, and there will be if interest rates come down.
We're jumping to McKesson, reiterated by $775 at Argus. Joe, this is yours.
Yeah, they're really executing cost efficiency. It's almost a strategy that we saw in play at Meta a number of years ago, skinnying down the business, moving away from areas that have been underperforming, getting out of geographic areas like Europe that have been challenged as well. So that skinnying down process is leading to revenue growth acceleration, and the street is rewarding them for that.
All right, UBS, they're bullish today on Ross, TJX, and Burlington. They have increased conviction that those 3 companies are still good investments at current valuations. You own Ross and TJX. You sold Burlington in the most recent rebalance. Tell us more.
Yeah, highlight the word still. Highlight the word still, because what they're trying to do is defend against what has been poor price action. I could tell you that these
still. What do you mean still?
Well, they're saying still because they're defending against the poor.
Still good.
Still good. They're defending against the poor price action in a lot of these names. I could tell you that these names have lost the momentum clearly. We're in an environment where maybe not so much off price is as valuable as we previously thought. Collectively, of all of them, I still view TJX as the best in class just because of the economy of scale.
You got a thought on that? No? Anybody else?
I mean, I'm separate. I'm looking at Lululemon, and that stock just continues.
It's been terrible.
Continue to make
You're
lows.
looking at it, maybe buying it.
You know, I keep looking at it, but then, you know, competition is really hitting them. You've got Aloe, you've got others.
Yeah, but that's been the story for for a couple of years now.
Yeah, but
the
growth they've had in their store base, the competition is pretty significant. A couple of years ago, yeah, they were on the scene mostly online, but now it's. I don't know. I'd like to buy it because I think it's a better company than those two, and those two are short term.
What do you think is a better buy right now, Lulu or Nike? Oh. Where's the better risk reward? Where's the better risk reward?
It's asking if I want to die by gun or by sword. You know, they both have the same issues. I mean, Nike's seen massive competition come in.
What about sourcing? China's the whole issue with Nike. Is it also true with Lulu? I don't know.
It is, but not to as large an extent. I'd probably say Lulu.
I don't know what the valuation comparison is off the top of my head. So.
Well, Nike's cheaper, but I'd probably say Lulu.
Yeah.